This video is for educational and entertainment purposes only. Nothing you hear in this video should be taken as financial advice. I'm not a financial advisor, so always do your own research before making any investment decisions. So imagine this. A stock that Wall Street thought was just another meme play is suddenly attracting big institutional money, option traders are betting millions, and shorts are desperately trying to keep the price down. That stock is Opendoor. And if you're not watching it right now, you could be missing one of the biggest setups of the year. Opendoor is already moving today, climbing about 5% with a trading range between $7.92 and $8.83. And it's not just the price action that's interesting. Volume is exploding. We've seen over 179 million shares change hands compared to an average of 372 million. That kind of activity tells us that something bigger is brewing behind the scenes. Now, normally today we would have had fresh jobs and payroll data, but because of the government shutdown, all of that was paused. That's a big deal because that data could have supported a 50 basis point cut in the next Fed meeting, which would have been a massive tailwind for Opendoor and other high-growth stocks. Still, earlier this week when ADP numbers came in weak, Opendoor spiked. That shows us the market is already reacting positively to signs of weakness in the labor market because weakness there means more rate cuts, and rate cuts mean cheaper money, exactly what growth stocks like Opendoor need. Heading into next week, the market will be watching closely to see if the shutdown ends and the delayed reports are released. If that happens and the numbers confirm a slowdown, we could see a serious push higher. But it's not just macro data driving Opendoor. CEO Eric Wu, or Kaz as most people know him, has been out in front of investors recently. In a podcast, he admitted running a public company isn't easy, but he doesn't really care what the Wall Street Journal or analysts think. That attitude resonates with a lot of retail investors, and honestly, it's what Opendoor needed. A leader who's focused on execution, not headlines. Kaz also hinted that a big product change is about to roll out in the next week or two, something users may not immediately notice but could have a meaningful impact on the business. These small teases have investors buzzing and speculating about what's next. At the same time, big transactions are starting to light up. Dark pool data shows large institutional orders, 53 million, 46 million, 8 million, and $2.5 million blocks. That's not retail trading. That's serious money positioning itself. And it's happening just as a lot of people who were waiting on the sidelines because of the shutdown are realizing the market isn't collapsing and they're rushing back in. But here's where it gets even more interesting. Short interest is sky high. Around 144 million shares are currently being shorted, which makes up about 20% of the float. That's massive, and when you combine that with the options market, things get very explosive very quickly. Right now, there's about $35 million in call options versus only $8 million in puts, and nearly half of all the options activity is bullish. The key level to watch is 8.50. There are 137,000 contracts at that strike. If Opendoor can close above 850, a huge number of those calls move in the money, forcing market makers to hedge. That's the perfect setup for a gamma squeeze, the kind of chain reaction that can send a stock flying. On the flip side, shorts know this. That's why they're working hard to keep it suppressed. You may notice extra selling pressure anytime the price gets near that 850 mark. That's no coincidence. From a technical standpoint, we're sitting just under a pivot at 839. Support sits around 742, and resistance is at 936. If we zoom out, Elliott wave analysis suggests that as long as Opendoor holds above 601, the stock could be heading to the 11 to 1270 range in the coming weeks. That's a huge potential upside. Momentum is also on Opendoor's side. The stock is still above its 10-day moving average, showing buyers are in control. Algorithmic trading is adding fuel as well, which has been a trend over the last few sessions. Interestingly, the meme stock label seems to be fading. More and more investors are taking Opendoor seriously as a legitimate growth company, and much of that credit goes to Kaz for steadying the ship. So what does this all mean? If the shutdown ends, if jobs data comes in weak, if rate cuts get more likely, and if Opendoor manages to hold above 850, all of that together creates the perfect storm for a massive breakout. Shorts are trying to push back, but the pressure is building. And if they lose control, the move higher could be very fast. At the end of the day, Opendoor is no longer just speculation. It's gaining credibility, attracting big investors, and building momentum. For anyone watching closely, this could be the beginning of a much larger story. Now I want to hear from you. Do you think Opendoor can push through 850 and trigger a squeeze? Or do you think shorts will keep it pinned below? Drop your thoughts in the comments. And if you found this breakdown helpful, don't forget to like the video and subscribe for more updates. And once again, just to repeat, this is not financial advice. Always do your own research before investing your hard-earned money.